Okay, now in this section, we're going to talk about why commercial real estate and specifically multifamily real estate is the ideal investment. We're going to use the acronym IDEAL to kind of go through some of the advantages of commercial real estate and why it's such a lucrative and sought after investment vehicle for the very wealthy and even the not so wealthy. So let's start with I, which is a very obvious one, income. Real estate, commercial real estate and multifamily real estate is a cash flowing investment vehicle. You receive rents, every month usually, and it's recurring every month. It's typically consistent. The more units you have, the more consistent it is. So if you only have a 2-unit building and one of the tenants stops paying rent, half of your income is reduced. I should say goes away. But if you have a 100-unit building, it's a bit more consistent. But overall, the stability of the income makes it very attractive. There's also the ability to raise income by managing it well. We'll go more into that in later videos, but really operating it in an efficient manner can increase its income ability. So that's I. Next one is D, which is depreciation. So what do we mean by depreciation? When we talk about depreciation, we're always talking in terms of taxes. Now, you may have heard that commercial real estate is an extremely efficient tax vehicle. It's intentionally made that way. With commercial real estate, you're able to write off the value of the building over 39 years. So what that really means is that if you have a building that's worth $10 million, I want to point out actually, before I go too far, I'm talking about the value of the building, not the land. So if the overall building is worth $12 million, the land is worth 2, the structure itself is worth 10, you only get to depreciate the part that is the structure. So in that example, you're able to depreciate the $10 million over the course of 39 years. So really that means 1/39 of 10 million. You can write off your taxes. It's very popular because it's seen as a ghost expense. It's not an expense you really pay out of pocket, but you get to write it off as though you've paid it out of pocket. So that depreciation is very effective, and a lot of investors do figure that into their equation of why they invest in commercial real estate. I do want to point out that the key term is it's tax deferred, so that those taxes that you're really kicking the bucket down the road. You're not avoiding tax. That's not a thing. It is recaptured when you do go to sell, but there are some other things you can work. 1031 exchanges are a huge thing. The other thing I wanted to mention is cost segregation. It's a bit lesser known than straight line depreciation, but effectively what cost segregation is that you take not just the structure as a whole, you take its individual parts, and you might say, hey, carpet, for instance, doesn't last 39 years. It may only last 5 years. So you can actually take the depreciation of the carpet and take that a lot earlier on than you normally would. So that really accelerates the depreciation schedule. So you can actually write off more losses in the first few years than you otherwise normally would be able to. So that's depreciation. We're really talking about the tax efficiency vehicle of commercial real estate. The next one we're going to talk about is E, equity. So with commercial real estate, and really any kind of real estate, you have the ability to buy in the green, in equity, immediately. So for instance, you may have $1 million building. If you're able to get a good deal on it, say for $950 or even $925, you've instantly made that $50,000 or $75,000 in equity the moment you close the property. This is unlike, say, the stock market, where you're buying stocks at the current market price. Now, you may think that, hey, I believe the market price is lower than what it should be, but you actually buying it, you do not have an opportunity to buy stocks below what they're actually trading on the market. With real estate, you very much have that opportunity. There's also principal pay down over time is very popular. You're naturally making mortgage payments, and the principal gets paid down over time, increasing your equity. So equity is a component of the IDEAL acronym that we really look into as being the ability to purchase below what the retail price currently is. So it's E, equity. The next one in our IDEAL acronym is A for appreciation. So I don't want to confuse you. We talked about depreciation a couple of letters ago. Now we're talking about appreciation. This has nothing to do with taxes. We're talking about the appreciation of the property. This is the real meat and potatoes of why a lot of people do commercial real estate, why it's so popular. With commercial real estate, we will get into this in a later video more in depth, but for now, know that commercial real estate is typically valued by the amount of income it produces. So with that said, the logic is that if you're able to increase income, the value of the property will actually increase with it. Likewise, if the income decreases, which nobody should be trying to do, but the actual value of the property will decrease as well. So we call this forced appreciation, because you're actually able to force the income to go up. And by forcing the income to go up, what I'm talking about is raising rents, lowering expenses, really just making it a more profitable operation. So that's forced appreciation. You'll also get natural appreciation over time. That's, just like buying a house in a good area. If you're buying a multifamily or commercial building in a prospering area, you're going to get that natural appreciation. Likewise, if you go to a declining area, you're going to get that decrease in value over time. But typically, commercial and multifamily properties do appreciate over time, and they're seen as a very good hedge against inflation. So that is A, appreciation. We've got one more letter left in our IDEAL acronym. That is leverage. Leverage is probably my favorite one out of the whole group. Quite simply, it allows people without as much starting capital to invest in commercial real estate and multifamily properties. So it's a very powerful tool in being able to leverage a property. Someone who only has $100,000 next to their name is able to buy a $400,000 property. The same goes for houses, and which is why purchasing a house for most American families is the best investment they ever make in their lives. But for multifamily commercial real estate investors, leverage is an extremely important tool, especially as you're starting out. Compare it with, say stocks. You don't really have the ability to leverage stocks. You can get a margin account, I know, and purchase option derivatives, which can leverage your position. But really, you'd be hard strung to find an investment vehicle that you're able to leverage, 4-to-1 outside of commercial real estate. So what does this mean? It means you can scale your business pretty quickly from the outset. People talk about leverage, and we'll discuss leverage a lot more in future videos. Some people frown upon leverage and getting debt. I say that leverage doesn't have feelings. It's neither good nor bad. It compounds wins and losses. Really, I just see it as an amplifier. So if you have a good deal and you apply leverage to it, it can become a great deal. If you have a bad deal and you apply leverage to it, it can become a terrible deal. So leverage has no feelings. Again, we'll get into more of that later on. But that sums up our IDEAL acronym, IDEAL. Let's move on to the real meat and potatoes of multifamily and commercial real estate investing, the metrics we use. But keep this acronym IDEAL in mind when we go through them, and you can see how they're applied throughout.